Assalamu alaikum and welcome to the Stock Sense Morning Brief. I'm Malik and it's Thursday, November 20th, 2025. We're here to give you a concise look at what's driving the Pakistan Stock Exchange, breaking down the numbers and the news that matters to your investments. Let's dive straight into yesterday's market action, which saw a welcome rebound after a couple of challenging sessions. The KSE-100 index closed at around 162,200 points, marking a gain of about 1,290 points, or nearly 0.8%. This was a positive shift compared to Tuesday, when the index had dipped by about 750 points, or nearly 0.5%. Market participation also saw some interesting shifts. On Wednesday, the main board recorded over 1 billion shares traded, valued at roughly 45 billion rupees. This is a noticeable decrease in volume compared to Tuesday's over 1.5 billion shares, though the traded value actually increased from Tuesday's, around 39 billion rupees. This indicates that while fewer shares changed hands, the value of those transactions was higher, possibly pointing to interest in larger cap stocks. Looking at sector performance, we saw some key players shaping the market's direction. The oil and gas exploration company sector had a notable positive impact, pushing the market up significantly. Similarly, the fertilizer sector also contributed positively, adding to the day's gains. On the flip side, the automobile assembler sector exerted a negative pull, dragging the market down. These three sectors were the most impactful in influencing the overall index movement. From a technical perspective, the KSE-100 is currently showing a mixed but generally positive outlook. Most short-term and long-term moving averages are flashing buy signals, suggesting an underlying bullish sentiment. However, some indicators like the Hull moving average are leaning towards sell, indicating some caution. For pivot points, the classical pivot stands at around 162,650. Investors should watch the first major resistance level at approximately 169,000, while a key support level to monitor is around 155,300. On the corporate front, there are a few announcements to keep an eye on. F-Treat Manu has announced an interim dividend of 15%. Several companies have board meetings scheduled for today, November 20th. Honda Atlas Cars, Bawani Air Products, and TPL Corp will be reviewing their quarterly accounts for the period ended September 30th, 2025. TPL Corp will also be considering its annual accounts for the year ended June 30th, 2025. Additionally, Punjab Oil Mills, Mahmood Textile Mills, and Bank Makrama Limited have board meetings to consider matters other than financial results. For those tracking distributions, there are no major last day entitlements today, so no immediate deadlines to be aware of for eligibility. In macro developments, we've seen some contrasting news. On a positive note, the government has acknowledged that rooftop solar net metering is not negatively impacting the national grid, which removes a significant policy uncertainty and supports the growth of renewable energy. Pakistan is also making strategic moves to boost its economy, with reports of an artificial island being built to ramp up oil and gas exploration, aiming to reduce reliance on energy imports. Furthermore, the country has launched its first standardized bunkering operations at Karachi port, a move expected to attract more international shipping and generate foreign exchange. Adding to the positive sentiment, the International Finance Corporation and Standard Chartered Pakistan have set up a $400 million risk participation facility to support local companies' trade and working capital needs, which is crucial for exports and foreign exchange inflows. There's also good news for consumers, as power firms are seeking to refund about 6.3 billion rupees for October usage due to a negative fuel cost adjustment, which could help ease inflationary pressures. However, there are also some headwinds. The European Union envoy has warned Pakistan to do more on fulfilling GSP Plus conventions ahead of a review. This is a critical point, as the GSP Plus status grants duty-free access for many Pakistani exports, especially textiles, to the EU market. A potential downgrade could significantly impact our export-oriented industries. Compounding this concern, textile and clothing exports have continued their downward trend for the third consecutive consecutive month, highlighting persistent challenges in global demand and domestic competitiveness. We're also seeing an increase in operational costs, as regasified liquefied natural gas, or RLNG, prices have gone up for the third time this November, mainly due to higher system losses. This will likely translate into higher production costs for industries and potentially higher electricity tariffs. Lastly, Pakistan's current account posted a $112 million deficit in October, indicating that the country is spending more foreign currency than it's earning, which can put pressure on foreign exchange reserves and the local currency. Turning to institutional flows, yesterday saw a slight net selling by foreign institutional investors, amounting to about $1.5 million. This was, however, absorbed by local institutions, who were net buyers by roughly the same amount. Delving deeper, local banks and development financial institutions were significant net buyers, purchasing around $11.7 million worth of equities. Individual investors and broker proprietary desks also showed net buying. On the summing side, mutual funds were the largest net sellers, offloading nearly $14.3 million, while foreign corporates and insurance companies also registered net selling. Overall, it appears local institutional buying, particularly from banks, helped to counter the selling pressure from mutual funds and foreign participants. My take from all of this, Malik's take, is that the market is currently navigating a complex environment of mixed signals. Yesterday's rebound is certainly encouraging, showing that there's still underlying interest, particularly in key sectors like oil and gas and fertilizers. However, the broader economic narrative presents challenges, especially concerning our export performance and the critical GSP Plus status, along with rising energy costs. The institutional flows suggest that local players are stepping in to support the market amidst foreign and mutual fund selling. Investors need to remain vigilant and selective, focusing on companies with strong fundamentals that can weather these economic crosscurrents. That's all for today's Stock Sense Morning Brief. We hope this update helps you stay informed and make sense of the market. Thank you for tuning in, and we'll be back tomorrow with more insights. Until then, invest wisely.